Hey everyone, wanted to do this next video in the Taxes in Retirement series for y'all here with Curran Financial Partners. My name's Mike. Just as a reminder, we have several other videos preceding this. So there's several other videos before this one specifically. So I encourage you to go back and look at those. They should be in the email down below. And I also encourage you to please subscribe down below. Give us a like, give us a thumbs up, leave us a little review, and leave a comment if you do have specific questions on this. We're here to help. We're here to provide answers and value around different tax questions, specifically as we're gearing up towards retirement, but also get into retirement. The whole point of the company, the whole point of the firm, as our rally cry, is to have a full written retirement plan where we look at all of these pieces from taxes to Social Security to healthcare to investments to income. But this is a specific conversation on our taxes as a retiree. And tonight's a unique one. This is a little bit more complex of a conversation because I want to talk about how much of my Social Security income is taxed and how do I calculate how much of it is taxed, because it's not an easily understandable formula per se. From a state level, it can be easy. Here in the state of South Carolina, where we're based, there's no income tax on your Social Security income. But from a federal level, there is taxation depending on certain circumstances. So I want to go through this, and it is, again, a complex mathematical equation. And I'll tell you honestly, I have sat down with countless families, and no one can tell me how much of their Social Security income is taxed. And a lot of times I just even instinctively go plug it into the software and say, okay, this is how much is taxed, because the software that we use will just spit out the calculation. But it's important to know what actually flows into my calculation to tell me how much of my Social Security income is taxed. So there's multiple layers in here. And the first layer is calculating what's called your provisional income. Now, honestly, this calculation is seldom used anywhere else in the tax code except for how much of your Social Security is taxed. But this first layer is pretty basic. All we need to do is take 50% of your Social Security benefits. So right now in 2023, the average Social Security income payment is about $1,830 a month, right in that range. And if I do that for the year, it's right at $22,000 for the year. So if I get $22,000 for the year of Social Security income, then I cut it in half. 50% means half. So in this case, that's $11,000 flows into this provisional income calculation. Then I add my other income. Now, what counts as other income in this case? This is considered ordinary income. So any IRA distributions or pre-tax distributions, so that'd be like 401ks, TSP, that kind of stuff. Any pensions, if I have a taxable pension. Typically, you see dividends and interest, certain types of dividends and interest from the bank or CDs, or if I have taxable dividends and interest that are hitting my tax return, my 1040, that flows in there. There's other stuff as well, but just for the sake of the conversation, those are your normal ones. So let's just say I have $30,000 that I withdraw from my IRA every year, $2,500 a month, something like that, just for the sake of simple math. But this is the one that's little known. Tax-exempt interest. Most of us have heard municipal bonds have tax-exempt interest, meaning I don't pay taxes on that interest if I own a municipal bond for the municipality of something in the state of South Carolina, right? That interest itself is tax-exempt from typically federal and state income, but how much tax-exempt interest you get does actually go into the calculation with Social Security. Go figure, the government found a way to tax it even though it's tax exempt. Go figure. But this is something that's little known, and it's regardless of if you own a tax exempt bond, a tax exempt bond fund. If you have tax exempt interest, that's why you have to report it, because it goes into how much of my Social Security income is taxed. But for the sake of this conversation, let's just call that zero to make it easy math. That means 50% of my Social Security plus my income, my provisional income, if I run this, is $41,000 for the year. Pretty simple to determine what is my provisional income, but that doesn't mean that's how much is taxed. That's just the first layer to determine provisional income is, okay, First layer to determine how much of my Social Security is taxed. After we have this number, we then turn into these income thresholds. And I copied and pasted this straight off the IRS website to show you how ambiguous they worded this. And I think they worded it this way on purpose because it's just, why don't they make it easy? They never make it easy. But you will pay on only 85% of your Social Security benefits, meaning at most you're paying ordinary income tax on 85% of your paycheck. Never 100% of your paycheck is taxable. But they use these thresholds, and I'm going to go down here as if I'm filing a married filing jointly tax return. And when I say it's worded ambiguously, it's because this first threshold is if you're between your provisional income. This is combined income. We could also use provisional income interchangeable in this conversation. But if my provisional income is between $32,000 and $44,000, it says you may have to pay income tax on up to 50% of your benefits. If I'm over $44,000 in my provisional income, then up to 85% of my benefits may be taxable. If I'm below 32, I don't pay any tax on my Social Security income. So two things with that. One, if my provisional income is less than $32,000 and I filed my tax return jointly, I pay zero. I don't pay income tax on any of my Social Security. So that means if you live on Social Security alone, you're not paying any federal income tax. But if you have other income pieces, you can still be below that and have no Social Security income taxed. But the second thing with that is you may have to pay tax on up to 50% or up to 85% may be taxable. That's incredibly ambiguous. They don't give you a direct answer on this on purpose because these thresholds, you then need to go into another layer that's on here. And that other layer is here where they don't update these figures too often, but as a married filing jointly taxpayer, if I'm between that $32,000 and $44,000 provisional income number, then we need to do more math. We need to do, okay, what was half of my Social Security benefits? Okay, half of my Social Security benefits, if I go back here, that was $11,000. Or half of my provisional income above that first layer threshold. Okay, so that first layer threshold is $32,000. So what do I have above that? In this case, I have $41,000. So $41,000 is my provisional income, and the threshold starts at $32,000. So 41 minus 32 is $9,000 total. So 9,000 divided by 2 is 50%. So then I take the lesser of those two numbers. So the lesser of half of my benefits, which is 11, or 41 minus 32, which is 9. Which one's smaller? Oh, 50% of that. So that's 4,500. Trying to draw on this, forgive me. 4,500 is less than 11,000. So then the answer is, okay, so this one's smaller, 4,500. Then I take that 4,500 and I flow it through my ordinary income tax bracket. They really don't make it easy to determine how much of your Social Security income is taxed. I got to do my provisional income first. Then I'm going to put my provisional income through a threshold. Then I'm going to do the math on that threshold in terms of how much actually goes into my ordinary income tax bracket. Then I got to run that number through the ordinary income tax bracket. So again, to recap, calculate provisional income. 50% of my Social Security benefit plus the other taxable income plus any tax-exempt interest gives me my provisional income number. Then I run that provisional income number through a threshold that if I'm between 32 and 44, then I need to do the math of which one's lesser. The lesser of 50% of my Social Security or 50% of my provisional income above that 32. And then I put that into the ordinary income tax bracket. But if I'm over 44, that's where things get also a little bit sticky because we have to do the math of, okay, how much is in this threshold and then how much is in this threshold. So I still need to do 50% of my benefits. If my provisional income is between those two brackets, how much is between those two brackets? There's $12,000 there. So that means 6, which is different than my provision. This is where it's a very in-depth perception of each person is a different mathematical equation. But we need to go back to this. how do I keep my Social Security income tax down as low as possible? It's by looking at what's my income, what's my tax exempt interest, and determining when is a good time to elect Social Security. So again, I encourage you, please ask questions. We're here to help. We'll help walk you through this. We have a software that we can just plug in some data for you. Where are we in terms of what's our Social Security, what's our income, what's our tax exempt income, what's the other stuff that's going on with Schedule C, Schedule E, Lord knows whatever else we have, if we have rental properties or what have you. And then adjust as we go year over year and start getting proactive with this. This is a more in-depth one. So again, lean into us if you have questions or concerns. But this is the basics. We need to look at Social Security, income, Social Security, my other income that's taxable, and any tax exempt interest. And that's the basic layer, and keep that as low as possible if you don't want to pay as much on Social Security income tax as possible. So lean into us. And again, I encourage you, please leave a comment below, give us a thumbs up, subscribe to our YouTube channel, and then let us know if you have any questions or concerns. Thanks so much. I appreciate it. We'll see you next time.